Good morning, ladies and gentlemen. This is Don, the hardest working nobody in Bitcoin, along with Troy, both in studio for the first time in months, talking the world of Bitcoin and crypto. Welcome to the Defion Productions podcast. We are sitting at currently a price of Bitcoin of 102,478 as Bitcoin has reclaimed its 100,000 milestone this week. ETH sitting at 3,973, a shade under 4K. We're going to talk about the week in Bitcoin and crypto. We're going to talk about the MicroStrategy Microsoft relationship where Microsoft decided against, their shareholders did, in regards to a Bitcoin strategic reserve for that company, putting it on the balance sheet. We're going to talk about Eric Trump. We're going to talk about Donald Trump as Donald Trump rang the bell at the New York Stock Exchange today and some of the things that he had to say when he was doing that. And we'll talk about many other things. Troy, you want to jump in and give us the lowdown in regards to what any degenerate traders out there are looking at doing with their portfolios?
Well, stay out of leverage, and if you were in leverage before that recent dump, that was it wicked down to 91K I
Yeah.
seen on Bitcoin, and if you're playing with inefficient leverage, you're going to be wiped out completely. So just be careful on those aspects of the market because it's very volatile around those big numbers like the 100K threshold. But we see some short sellers still, like for example ETH. We're about to reclaim 4K, and looking at the sell wall. When I'm looking at the heat map, the liquidations, people on the other side of the trade, where are they sitting? And we have a wall around 40. I think it's like $4,050, like around $4,100. We have that wall. So if we can reclaim that and we can break through that, that could lead to a short squeeze. It could be short tempered, but I believe once we break that significant level, I think we're going to be holding that level too. And going back to the phases of a bull run, it all starts with Bitcoin, and then we slowly go into down the spectrum. Like for example, let me talk about like retail mindset. Like for example, my dad, he's like, why would I buy Bitcoin at 100K? Because not everyone's educated enough to know that it's divisible. One Bitcoin's broken up into 100 million satoshis.
Then
Not everyone knows
he
that.
can get it at 250K.
So it's unit bias. Yeah, it's unit bias. So when you're looking at a coin that's trading at 4,000 opposed to 100,000, or a coin that's trading at 0.001, like it's unit bias. So people are be looking down the token rank list and they're going to see what's the next coin. Well, Ethereum's number 2, and historically speaking,
Shitcoin number 1.
Shitcoin? No, it's not shitcoin. But historically speaking, that liquidity flows into different assets down that spectrum. And we are actually in altcoin season based on the altcoin season index. That's just like a slang. Really, the others D is long right now in a trend modeling perspective. But yeah, I mean, I'm feeling good. I'm the I wouldn't say ETH maxi, but I'm pretty allocated to ETH. So I'm feeling good about the market right now. So.
Well, it's always good to see Bitcoin at 100K, but we were kind of joking before we went live that it's weird that 100K Bitcoin is actually boring. We're trading sideways in this 100K range, and we're waiting for it to do something to the upside. And it can be we can be very greedy as Bitcoiners in this space when we anticipate the next move. We get to that next milestone, we celebrate it, and then we're like, what's next? Because we know, number goes up forever. It doesn't go up in a straight line. Obviously, it's going to have its peaks and valleys along the way, but we know that this asset is on its way to $1 million a coin. And we're going to talk about some of the other high-profile people who also feel the same during the course of this podcast. But we know that this is going to continually go up and to the right. And when we sit in these ranges like this, especially in a bull market, it could be a little bit agitating, but it's all in good fun.
No, it's all healthy. And like this market's more advanced, so it's less volatile. There's more money in the ecosystem. But like looking back to the last bull run when we were violently moving up, you're gonna have 5, 10. I've even seen 30% corrections. We even had a 50% correction in the bull run before we reached to new highs. So
we haven't had it yet.
I'm looking at this like a chessboard, really. Like I have to be very strategic. I have to position myself and always think about what my opponent's doing next, right? And like position myself where I could take advantage of that, and being able to adapt, right? So like as markets evolve, as macro policy shifts change, global liquidity projections, whether they're going down or up. Like you always have to be adapting to this market. And I feel like that's similar to the chess game. Like so, like every move I'm making now, moving forward, is like because I'm more of an active investor, and this is why it's perfect because you're more of the long term, stack sats, and I play the 4 year cycle, so it's medium to long term time horizons. So just position yourself to take advantage of the longer term cycle, but also the short term volatility on the way up, and that's kind of like how I'm approaching the market. So.
Yeah, I mean we're not seeing these big gyrating downside moves like we've seen in previous bull runs. We saw one. We did see when we hit 70, 73, I think, when we went down to like what was it, 50, 58. We were stuck at that 58, and a lot of people on Twitter had hashtag 58 gang as their Twitter handles for a minute. But that was that one big move, 20-ish plus percent downside moves that we've seen. But besides that, we've really only seen like between 5 and maybe close to 10% downside moves while we've had this run up. And I think it's probably a lot due to the fact that we have Michael Saylor buying like a psychopath the last couple of months. I mean, I feel like it's every week he's announcing another like 5-figure Bitcoin acquisition for MicroStrategy, as well as you have the ETFs that are continuing to buy. So I don't know if history is going to necessarily repeat like it has in the past, seeing multiple 30%, 25 to 30% dips like we have in previous parabolic bull run cycles. We may not have that. Not to say that we definitely won't, but I think that there's definitely a thesis to be had of us not experiencing the same sort of nauseating drawdowns that we've had previous cycles this cycle because of all the stuff that's been built in this bull run moving up to 100K with the ETFs and with MicroStrategy. We can also talk briefly about MicroStrategy. MicroStrategy officially passed ownership of 2% of the entire Bitcoin network. Many articles were written this past week. One predominantly that I was paying attention to, Anthony Pompliano wrote, and I kind of tweeted and wrote about on some of my other social medias my thoughts on it, about how a lot of people are worried that we have these actors like MicroStrategy or BlackRock or Fidelity and all these ETF players that are gathering such a huge ownership of the network. So we can talk about that. There's a big misconception that just because Michael Saylor, and I'm going to put that in quotations, is buying up all this Bitcoin, technically he's not. He's buying it on behalf of his shareholders of MicroStrategy. So even though Michael Saylor is the one that's out in front when these buys are made and you talk about Saylor buying it, if we're being technical, it's not Michael Saylor personally that's buying the Bitcoin. It's on behalf of the shareholders of MicroStrategy, which makes up tens of thousands, if not hundreds of thousands of people, as we've seen of all these groups that are being made, especially on Twitter, MicroStrategy long people. Like there's a lot of shareholders of MicroStrategy.
From what I'm reading, isn't he selling MicroStrategy stock to buy back more Bitcoin?
He's leveraging debt. He's not necessarily selling. He's selling not shares. He's basically leveraging future debt that can be convertible bonds that can be converted into into shares in the future if they so decide. So he's basically found a money glitch, and he's just creating more opportunity for the company to grow by having Bitcoin on its balance sheet. And then when you talk about BlackRock and you talk about the ETFs, technically BlackRock doesn't own any Bitcoin. Again, they own Bitcoin on behalf of the shareholders that own the ETF shares. But even beyond that, if you want to get super technical, none of them technically own the Bitcoin because
just assets
it's
under
being
management.
No, because it's being held at Coinbase, and Coinbase holds the keys.
Right.
So Coinbase actually has.
I just seen something online using I think it was Arkham Intelligence, where you can see you're basically a wallet tracker. So you're tracking all these big hedge funds' wallets because everything's on chain, everything's transparent. So you can see everything. So I think there was something where there was over like 1,000 wallets or something. There was all this Bitcoin being transferred from I believe it was from Coinbase to all these different wallets, and it caused people some skeptics were like, why would that be the case? Did you see that by any chance? Or
that specific article that you're talking about, I didn't, but I can just speak to the fact that like Coinbase is an exchange, and they're always moving things around. The blockchain is transparent, so you can see when Bitcoin moves from one place to another. Um, that's one of the beauties of Bitcoin, is the fact of the transparency of the blockchain, being able to see the transactions.
But yes, that's true. But isn't that's a pro? But what's a con? Is this a lack of privacy? So like when people, because I know wallets are getting blacklisted, whitelisted. So like, what does this mean for someone that holds Bitcoin, whether their wallet's blacklisted or like that everything's transparent on chain? You can see all the transactions, the hash rate, all everything. Um, the time stamp of when the transaction went through from the wallet, all that thing's traced, and now we have all these IRS agents, obviously, like working in crypto, that are able to read on-chain analytics. What is this for privacy? Is this good for privacy? Are there going to be more products like Tornado Cash that help you transfer value privately, where everything isn't on chain? Or what do you think? Do you think this is good or bad for the world?
It depends on your
Because
perspective.
it's a truth machine. Because when you're able to see all these transactions from all these big corporations and institutions, and people like just any average Joe, you're able to see this data on chain. Is that good?
I think it depends on your perspective on what you're using Bitcoin and to a larger extent shitcoins, crypto for. If you are store of value guy like I am with Bitcoin, and you take your Bitcoin and you put it in cold storage and you never move it and you just hold on to it as an asset and you value it, then all this other stuff is just noise. It's not that important to you. But if you're using, I'll just say Bitcoin specifically. We'll talk about that because the other crypto coins, they have their specific functions, which some of that is what you're talking about. But if we're just keeping it on Bitcoin, if you're using Bitcoin to transact, my opinion is that you're using Bitcoin wrong.
Mm-hmm.
Right, you're more in the Roger Ver world of Bitcoin.
You're not using it as
where you want it to be peer to peer.
Right.
Where I think Bitcoin has evolved into something much greater than a peer to peer currency. Now I do recognize, because I've read it multiple times, the white paper, and it does say peer to peer in it. But I think that it's evolved like many things do. Like life just evolves and things evolve, technologies evolve, and it's evolved into this store of value asset that people want to hold, because it's going to continue to appreciate, instead of transacting every single day with it when you know that the number is going to continue to go up and you're losing value by transacting in it. So I don't think it's as worrisome to Bitcoiners like myself, which make up, if you look on chain, a large majority of us are long-term holders, right? We don't sell. So I don't think it really matters to us. But new people coming into Bitcoin that are using it potentially for like some of the purposes that you're thinking of, those are maybe some of the candidates that end up going into shit coins, because they're not necessarily in it for the store value function, and they may not even be in it for number go up and trying to make money. They may be specifically looking for privacy, and I don't think Bitcoin is the place you want to be if you're looking for specifically privacy in transactions. Right?
Yeah.
Which I think is a good thing, and it goes against the whole thesis of like Elizabeth Warren and all those cronies that are like, oh, Bitcoin's used to, for nefarious activities. It's like, no, dude. Like, if you're gonna do anything nefarious and you want to use Bitcoin, it's probably the worst thing you can use if you're gonna commit a crime. You use dollars or use some other other coins like Monero, or like some of these other like privacy quote unquote shit coins that you would do those types of things. Like Bitcoin's not for that.
Yeah.
Like, Bitcoin is
the
store of value. Like that is its best value, in my opinion.
And as your learning curve, like as you grow and mature in this space, you originally think Bitcoin's is a payment system where you're going to use it to transact and engage in commerce. And once you dive down the rabbit hole, it's more just like it's a store of value. There's other coins on chains, for example, stable coins, which are fiat-backed stable coins, one-to-one, that are pegged. So there's other tokenized fiat systems in this world, in the world of blockchain, where you can transact without actually spending your Bitcoin. But I know that El Salvador, a lot of people engage in commerce with Bitcoin. So that's obviously not the smartest decision, but it's what do you think about that? Because there's countries that are using it as a payment system, and now you're saying you're using it as a store of value.
Again, this is like first world problems. So we're talking about two different situations and scenarios. If you're in
Unbanked populations.
yeah, if you're unbanked and you're in a developing country, you have so many more problems and issues that you have to overcome and deal with than you do for somebody in my position or our position being here in the United States, that we have the luxury of using Bitcoin as a store of value. We have the luxury of acquiring, different things in the world in our world much easier than somebody would be in Nigeria or El Salvador or one of these other places. For them, a lot of those countries, their big problem is that they work in a place different from their homeland, so they have to transfer value and wealth back to their homeland. And traditionally, that would be like Western Union or one of these other remittance services that, let's say you're making $100 a day and you're trying to send some of that back, and after all the fees that you're giving up a huge amount of your value that you've worked for that you're sending back to your family just in fees. So being able to do that like instantaneously with the confirmations of the blockchain, earn your money, get paid in Bitcoin, send it like without worrying about the other factors that are going on in regards to the remittance services and fees and stuff like that. There's a lot of value for them in being able to do those types of things. So their goals and their incentives of holding and owning Bitcoin are much different than the goals and incentives of people that live in the West or more modernized countries, in my opinion.
Yes. So I want to bring up, so for those who don't know, we are related through marriage, right?
Yep.
And we all know Uncle Mike. So Uncle Mike, if you're watching this, shout out. You're a great dude. So we were having a conversation, and he sent me something, just like some random reel, and I said Bitcoin 100K. And he said, take your profits, buy real estate. I said, Bitcoin outperforms real estate in the last 10 years. I said, but I am getting out of leverage right now to de-risk. I don't think he knows what that means, but I just put it out there. He said, it's paper. I said, no, it's digital energy, better than inflated currency. He said, remember the tulip craze. People always bring up the tulip craze. And I said, I'd rather trust math and energy than politicians. Yeah, tulips aren't scarce. I want control over money. Crypto gives you the ability to own your private keys to your liquidity without it ever being seized. It's portable. It's divisible. It's more scarce, 21 million Bitcoins. It's more scarce than gold. And it's technology. This is disruptive technology. This isn't just a plant in the ground that you can grow and make more of. This is blockchain. This is cryptography. So history. He knows history. Like, money is always evolving. The way we bargain, the way we engage in commerce is always adapting, right? We were in seashells, and then we had like little coins, and then we went to paper dollars, and now we're here at the cusp of this blockchain of digital energy. And I didn't say digital money. I said digital energy. Now, would you be able to talk a little bit about Bitcoin and the saying digital energy, and what does digital energy mean?
I wanna attack something else because I can completely destroy his thesis on real estate and Bitcoin. Not even the tulips. The tulips is such a tired argument. It's not even worth the time. Like, if you're gonna go back to tulips, Bitcoin's an IQ test, okay? And it tests your financial IQ. And if your financial IQ is not high enough, it's very difficult to comprehend and understand why Bitcoin is necessary and needed. So I'm gonna attack one thing at a time. And the first thing I'm gonna attack is his ideology or his thesis that you should sell your Bitcoin and put it into real estate. Okay. I like how you handle that, but there's a simple way that you can handle that.
Okay.
That just like numbers. We have opinions and we have emotions. We have feelings. So they can all be misinterpreted. It's very hard to misinterpret numbers, right? 1 + 1 = 2. You can't misinterpret that, right? 2 + 2 = 4. Yeah. It can't be, well, I want it to be 5 and I feel like it should be 6. It's no. 2 + 2 = 4. It's a truth. It's a hard truth. It's a truth.
Why is it a hard truth?
Some people want 2 + 2 to be 5 because they want more. It can only be 4. It can never be 5.
Yeah.
It's a hard truth. I want 2 + 2 to = 5, but it only equals 4. No matter how hard I try to make it be 5, it's always going to be 4. My emotions want it to be 5. The math tells me it's 4. That's why I say it's hard truths. So what I'll tell you is, when we can speak directly to the viewers or to Uncle Mike, if you take a look at real estate, it's a great example, right? If you take a look at real estate, the average house in 2016, we'll use that just as an example because I can say it off the top of my head. The average house in 2016 in the country that we are residing in right now, the United States of America, would probably run you in this country an average of about $250,000. Okay, we'll use that number for our math.
And what was the date?
2016.
2016.
Okay, in 2016, you could get one Bitcoin for about $500.
Right.
Okay. So if you do the math, right? We'll do the math real quick. I'll get the calculator out just so nobody's thinking that I'm trying to manipulate the math and manipulate the numbers here. So we're going to take really quick, and if anybody wants to follow along with their little calculators, they can do the same. We're going to take $250,000 and we're going to divide that by 500. Okay? So if you divide 250,000 and you divide that by the price of one Bitcoin in 2016, you get 500 Bitcoin. So 500 times 500 equals 250,000, which is equal to the average house in the United States of America in 2016, which is 8 years ago, less than a decade. Okay? Now, again, depending on where you live in the country, these numbers can be different, but we're just going to use averages. Roughly, in this area, it's a little bit less, but nationally, the average house right now today in 2024 is around $450,000. Okay? We started this podcast with a $102,000 Bitcoin. So today, the same house that cost $250,000 in 2016 almost doubled, right? Which is pretty decent. Went from $250,000 to $450,000. So if you held the house for 8 years, your $250,000 house made $200,000,
and that's
which you would feel would be a good thing. You bought your house for $250,000. It's $450,000 now,
that's not including
and you would be
inflation.
Like, yes, you would be like, yes, I made $200,000 in this house. I'm doing very good.
Yeah.
Look at me at real estate. Awesome, right? If you had 500 Bitcoin back then and bought your $250,000 house and you sold it today, you would have went from 500 Bitcoin to 4.5 Bitcoin today. So using Uncle Mike's thesis of take your profits and put it into real estate, if you would have done that at $500 Bitcoin and bought that Bitcoin earlier and thought you were a genius, made a bunch of money because you could have been an early guy, right? And said, you know what? I bought Bitcoin for $10 and I made $250,000 on my 500 Bitcoin that I bought for $10 that I bought for $5,000, right? And you put in real estate and you held it for 8 years, you would have made $200,000 of real money. But if you would have held the 500 Bitcoin, do math again, 500 times 102,000, you would have $51 million. 200,000, $51 million. Take your emotion and throw it in the trash and look at math. Now, any investor, Uncle Mike, I respect, and I know like your dad and these guys that have made money, Craig Waldeck, I'll throw that name out there too. Like he's a family member that watches stuff too. I could throw other names out there, like people that are really good investors that really understand money, have made money in real estate and made money in different areas. You know that it doesn't always just go up. You're going to have volatility. If you invest in the stock market and you look at the stock market from 2000 to 2024, every single year isn't positive. You don't see that every year. You got some of these. It's part of the game. Shit goes up, shit goes down. With Bitcoin, we've never seen the volatility that we have in Bitcoin. It gyrates crazy, right? You've had drawdowns of 75, 80, 90% that blow most people's minds. Yet here we are sitting at 100,000 Bitcoin and the thing was created 16 years ago. So you've got all this stuff going from pennies to 102,000, right? 8 years ago, it was worth $500. You've gone from $500 8 years ago to $102,000 today. If it did that 8 years ago, what's it going to do in another 8? So do I want to own this house at $450 today? Because that $450,000 house in 8 years might be worth $1 million. It might, right? It could. That's another double up. You made over $500,000. But if I take 4.5 Bitcoin today, and just say that Bitcoin gets to $1 million in 8 years, which is definitely possible because we went from 500 to 1,000. It's much harder to go from 500 to 100,000 than it is to go from 1 million to 100,000. We all know that by math, right? 500 to 100,000 is a 200x, right? We're talking about a 10x. It's math. It's not emotion. Take your emotion, throw it in the trash. This is math. So if you make $1 million, your house goes from 450 to $1 million, that's $550,000 profit. If Bitcoin goes to $1 million and we times that by 4.15 Bitcoin because we made our mistake and we're trying to fix that mistake and we keep the Bitcoin, now you got 4.5 million.
Yeah. And I also hear like people talking, like because you said it was volatile, it's going up and down. Obviously, markets oscillate. Do you ever hear that saying? It's volatile, so it's risky. It's volatile, so it's risky, right?
You know what's risky?
What's risky?
Owning a 2% bond when inflation's 7%,
Yeah,
because you're losing 5% of buying power.
yeah.
And that's extremely risky. When you're losing buying power and you're invested in the wrong assets and you're playing it safe, that's extremely risky, because that safe strategy that some advisor would have told you to have that 60/40 portfolio for years, when we hit 2 or 3 years of 9% inflation and he had you in that 2% bond, you were getting smoked, because they were telling you it was 9%, but what was it really? We both know it was in double digits. So you were in a safe asset thinking that you were doing the right thing, because you see your rate of return of being 2 or 3%. You're not losing money. You're not getting the negative that the stock market was doing, but your real rate of return is still negative because you're not keeping up with inflation. You need volatility in order to beat inflation and to beat all the other things that are coming against you when you're trying to invest.
Yeah, and also this is a new technology like Amazon, Apple, all these other stocks were very volatile in the early stages of the company, so that makes sense. Um, yeah, I mean Bitcoin is definitely the leader right now, but what do you think? Do you think there's other coins in the ecosystem that could outperform Bitcoin this cycle, or do you think just
It's a loaded
or
question.
here I got a better
That's a
question.
loaded
What
question.
what percentage of someone's portfolio? I could give you demographics, but what percentage of someone's portfolio should be allocated to Bitcoin? In this time, we're sitting at 102,000. What percentage of their net worth, including their house, their cars, their 401ks, all that? And it's different for every person, but
I
what do you
think
think would
I
be like
think
the
at least at this point in time, at the very least, you should be somewhere between 5 to 10% of your portfolio. If you want to have any chance in surviving the next 20 or 30 years, you should have 5 to 10% of your portfolio in Bitcoin specifically. Because if you do not, the way that things are going, if you are just relying on the traditional system of finance and that's it, you do not have a chance of surviving what's going to happen the next 20 or 30 years based on the trajectory of how things are going with the cost of living and with the cost of goods and services and the runaway inflation that we're experiencing that people just don't want to acknowledge is really happening. I'll really quickly just give you the example I talked about on the podcast maybe a month or two ago about how in 1994 I was making $4.25 an hour working a minimum wage job, entry level job. Today, that same job is $16.25 an hour, $16.50 an hour, and that's a 30-year span. That's a 4x. If you 4x from $16.50, 30 years ahead, you have to make $100,000 a year just to be making minimum wage.
Mhm.
The math doesn't work.
I have a concern that people often bring up, including family members, including people online, friends, and it's quantum computing, right? And we have a thread up here right now. We can pull it up. Should I share my screen? Okay. It says if quantum computing breaks encryption, the cryptography, in other words,
Mhm.
crypto would be the least of your worries. It will expose government and military secrets, exploit banking systems, and turn private chats public. But Google's Willow just came out, right? It's a new chip,
Mhm.
and it's at 500 and 105 qubits. Quips. This is. I'm new to this world.
Yeah, these are
Quantum computing.
yeah. Neither one of us are quantum guys.
Breaking Bitcoin's encryption would need 13 million qubits. We're at 105. Now, numbers compound. This could happen, sooner than later. But he says still a long way.
What
Do you
I'm
think this is something to worry about? Do you think quantum computing? Because we don't know the power of this.
and Andreas Antonopoulos had a really good speech on this at a Bitcoin conference where he talked about the threat of quantum computing, and basically the threat of getting to where it needs to be today of where Bitcoin sits right now is about 20 or 30 years away. So it's not a real threat as of right now. It's not a zero sum threat, but it's like as close to zero as it's a little bit more than zero of percent of a chance, because you can still upgrade the Bitcoin system, still upgrade the nodes, get a consensus of all
Migrate.
you fork if you got. There's a lot of ways that you can, if it does,
Got to that point. Yeah.
you'll be able to adjust, but they're still so far away. By the time it gets close to where it would meet it today, the goalposts will have moved because Bitcoin will have evolved.
Yeah.
It's all programmable. It's all been thought of. The threat is the real threat with all the stuff that's going on is what this tweet says. Government military secrets, those systems are not as secure as the Bitcoin system. Banking systems are archaic. If you want to talk about like unsafe system, I mean, we're using the clearinghouses from the 1970s in our banking system. That's why it still takes, like, if you write a check on Thursday, it says that it goes on Friday, but your bank doesn't actually get the funds until Monday or Tuesday. They just credit you the funds. But the clearinghouse still takes 2 to 3 business days for your funds to go from one bank to another. And that's a system that we were using in the 1970s that we're still using today. It's absolutely archaic and just ridiculous. But I mean, FUD is going to FUD. So you're going to see people. You're going to see people use that as the Bitcoin haters, the gold bugs. They're going to use that as, oh, see, Bitcoin's going to fail. Oh, see, this is going to destroy Bitcoin. This is going to be something you got to worry about. And it's just not a thing. It's just not.
I wanted to transition over to this because we've been talking a little bit about Bitcoin, and I want to talk a little bit about Ethereum. Larry Fink.
Real quick, I want to say hi to Ed Rogers. He's in our chat. He said, "What's up? What's up, Ed? How's it going, man?"
Thanks for tuning in.
Yeah, thanks for tuning in, man. Go ahead. I'm sorry.
So Larry Fink, President Trump's potential Treasury Secretary, understands that the entire world will live on Ethereum one day. Study the Larry Fink supply sink lessons in there. I believe personally that Ethereum will be the settlement foundation for finance. I think banks will be using Ethereum. It's over XRP. They'll be using Ethereum to settle financial transactions across the world on Ethereum. Do you think this is a possibility? Because I know that they're also purchasing a lot of it, right? And we already have the ETFs. We're getting adoption. Ethereum's a little bit newer than Bitcoin, but I think it has a lot more utility. And I can argue with you.
What do you mean a little bit newer than Bitcoin?
What?
What do you mean Ethereum's newer than Bitcoin?
It came out later. Bitcoin was
newer. Okay.
Yeah.
I misunderstood what you said. Yeah.
I think Ethereum will be the settlement layer for financial institutions. ETH will be, used as that deflationary store of value on that asset to pay for gas fees, pay validators, etc. I think Ethereum is undervalued extremely, right? And they have a lot of cash flows coming in. So, like, I believe, and we can argue this, that I think Ethereum
we're going to argue this.
We will argue this. I think Ethereum has more utility, more use cases than Bitcoin. Bitcoin to me, let's go. Bitcoin to me is more of a store of value.
I think
right?
we just lost viewers.
We just lost viewers. Oh, we lost 3 subs. Pack it up. Oh, by the way, Bitcoin's at 102, so we can keep it going. I just think there's more things that could be built on Ethereum. Like Bitcoin's more the store of value, protects your purchasing power, your energy, stuff like that. But Ethereum has a lot of things built on top of it. For example, Uniswap, and they're doing billions and billions. I think even $1 trillion in volume since they've been created. Now this is a decentralized exchange where people can transact tokens on this network, and you can settle transactions instantaneously. In the Ethereum network, the layer 1, a little bit more expensive fees, a little bit slower, but now we have layer 2s where you could have that liquidity fragmented and all across different layer 2s. So you still bearish Ethereum? You really don't like it? Like, you don't? I think
can I give my response? I think if Ethereum was created today, it would fail.
Okay.
I think the only reason why the only reason why Ethereum is still here, surviving, is because it has I forget what they call it when something's been around for 10 years. There's a certain name that it
Come on,
passes. I can't remember what it's called, but
the
when
proof.
something's been around for when it lasts like 10 years, it has a higher likelihood of
It has
lasting
a
another
trust
10.
pilot review.
No, it's not trust, but I forget the name of it. It's something like when something's I don't remember the name, but whatever the
Did you
case
ask
may
the
be.
Bitcoin CEO?
Let me respond to this. I think Ethereum is clunky. I think that there's the gas fees are so high. I think those NFT shit project thingies that people do are better off done on other chains than the Ethereum chain.
I
I think
disagree with that.
the foundation of Ethereum, including Vitalik, are just not as gung ho about that project as people probably want to believe or think. And I just don't think that Ethereum has performed anywhere near where it should perform as a number two, which only goes to prove that there is no second best, like Michael Saylor said a long time ago. Um, Ethereum survives because people want a shitcoin, and Ethereum is the top shitcoin. So people naturally will flow to that because they don't have, like we talked about at the beginning, they don't have $100,000 to throw on Bitcoin because they don't realize that they can buy parts of it, or maybe they just don't value the fact that they can't have a whole one. They'd rather have a whole of something else. So they flock to Ethereum for that. I think Ethereum is a failed project that the market has not caught up to yet. I would not be surprised at all if in the next 10 years we see that project no longer exist. I'm not making that prediction, not saying that's going to happen. I'm just saying is as bad as I view shitcoins on a totality, I will admit that there are a plethora, maybe not a plethora, that would be probably unfair to say, but I believe that if you're going to shitcoin, if you're going to go down the alternative coin rabbit hole, I don't see Ethereum as being, obviously price point it is the most valuable. But what people are looking for in regards to utility and all the shit they want to tell themselves of why they shitcoin, I don't think Ethereum is the best place to practice those nefarious habits. I think you can find that in other coins.
So you don't like the deflationary aspect. You don't like that they're burning it. It's proof of stake. You don't like any of that. You're not a fan.
Proof of stake, no, they should have stayed proof of work. I don't think anything that's proof of stake. I don't think anything that you can make the decision to change to proof of anything or make any sort of protocol changes is good. Michael Saylor can't decide to change something in the Bitcoin protocol. He can get from 2% to 10% in some crazy world, and he still can't decide, hey, I want Bitcoin to go proof of stake, or hey, I want consensus to only be X amount of nodes instead of X amount of nodes. Like, he has the same amount of decision making abilities and responsibilities as I have on the Bitcoin protocol. He just owns more of the economic value of it, but consensus and say, he has exactly the same. And people think that because he owns so much that he can move markets if he sold. There's a short-term truth to that. Yeah, if Michael Saylor sold all the Bitcoin of MicroStrategy tomorrow, it would definitely move markets, but it would move to other hands and disperse among the Bitcoin community and be a good thing. It wouldn't be a bad thing. So whether Michael Saylor and MicroStrategy own 2% or 5% or 0%, in the long-term grand scheme of things, it's irrelevant. It's just short-term noise.
Yeah. I mean, my ETH is long. Like, I'm a
Now that's
I'm a profit maximalist.
now
So
I say that let me be
yeah.
completely clear. In the next 6 to 12 months, there's money to be made in Ethereum. I'm not saying there isn't.
All right,
I'm
let's.
not saying that it's going to blow up this cycle. I think we talked before this podcast even started today that I can see Bitcoin. I can see Ethereum hitting 10,000 because shitcoiners are going to shitcoin and gamblers are going to gamble. Like, you can't stop that with a Bitcoin thesis. People are going to put money into those things and they're going
I
to
share my screen.
continue to buy. So I think that Ethereum will still. There's even an argument to be made that Ethereum could potentially outperform Bitcoin. A 3x for Bitcoin is 300,000. A 3x for ETH is what? From here, 12? I mean, I think getting to 12 could potentially happen before Bitcoin gets to 300. Maybe Bitcoin tops at 250 and ETH tops at 15. I don't know. Like, shitcoiners are going to shitcoin. People
Yeah.
are going to be in this for the USD aspect of it more so than they are going to be in the stacking sats aspect of it. And I'm a realist, even though I have my own feelings. I don't disregard the mass ideology of why people come into crypto and people come into this space looking for money the same way they do in any market. I recognize that.
Just on some on-chain metrics, let me pull this up. So it looks like, let me pull this chart up. Let's look at ETH real quick. So ETH, so right now we're looking at the heat map. So basically, because people hear the liquidations, like they hear people or a short squeeze, they hear these things, but they don't really know what it means. Basically, a liquidation event occurs when a trader's positions are closed due to price fluctuations or volatility, that their margin and their count is inefficient to cover their open positions. So to prevent further losses for both traders and the exchanges, the exchanges offer a liquidation level, which is part of the leverage traders' trades will be forcibly closed. So when we're looking at this, you can see that we have these are the short sellers, these are the people long on Bitcoin. We're trading at 101,608. So we have the next short, like the once we break, and it's about the all-time high was about 104 or something.
104.
Like 104. So once we hit 104, break through 104, we have confirmation of an uptrend. We have momentum. Our trend systems are long, which they're long right now on our time horizons. You can see that we have a potential squeeze. So if we can break over 104 on on Bitcoin, you can see I can see this next leg up be a massive candle, and I think we can hit about 110 to 115. We're gonna force all these short people, all these short sellers to be forced to close their positions, and this will cause the Bitcoin price to squeeze to should be roughly about 110. I think 110 to 115 is our next level on our next leg up, and this can happen pretty quick. But I also like to look at Ethereum because Ethereum still hasn't broken its all-time high, and I have more value in Ethereum, and we're looking at Ethereum on. Let's look at Ethereum on the 3-month chart, and you can see this is another heat map. We have more people longing, so this is all the people long. Now, if this price dumped and hit all these long liquidation, like this would flush, but like the probabilities of us going up are much higher than going down. But we have over 4,100. We have billions and billions of dollars of short sellers forced to close their position, which just can cause a squeeze in the price action of Bitcoin. So there's different on-chain metrics you can look. This is just one. There's multiple where you can see, the short-term holders, long-term holders, on-chain metrics, stuff like this. But these are things you got to pay attention to, especially if you're more of an active investor or trader. Everyone's their own unique trader. So just be looking for things. There's always signals to tell you. There's always things to look out for. But moving on, because I want to talk about what Michael Saylor just posted about Eric Trump. I am confident that I am confident that it is going to hit 1 million. Now, he didn't specifically give a time frame.
He's talking about Bitcoin, and he said before 2030. He did say before 2030. He feels Bitcoin will hit 1 million before 2030.
And that's a 10x from now.
That's a 10x from here in the next 6 years, which I think that would put us, let's see, next halving is going to be 2028. So the next parabolic run would theoretically be, if we continue to follow the same cycles, would be 2029. So I mean, if we hit 250, top out this cycle, and we follow the same trend, then that'd be a 4x from the cycle top. I mean, it's possible. I mean, there's the argument that's to be made that we break the 4-year cycles, and we're just in a consolidation trend where we don't have those extreme 70% plus drops like we've had in previous bear markets. That's potentially possible with the ETFs, potentially possible with MicroStrategy continuing to buy. The other thing we can talk about too that is related to that is this morning, Eric's father, the president-elect Donald Trump, was at the New York Stock Exchange ringing the bell. And Trump confirms he hopes to open a strategic reserve of cryptocurrency. Trump recently appointed David Sachs as a crypto czar. Jim Cramer asked him strategic petroleum reserve like for crypto. Trump's response was, yeah, I think so. We're going to do something great with crypto. We don't want China or anybody else embracing it, and we want to be ahead. So Trump's at the New York Stock Exchange on Wall Street being asked crypto questions, Bitcoin questions, talking about Bitcoin while ringing the New York Stock Exchange bell. I think that's a pretty big moment for us. In Bitcoin, you have the president-elect who's been on this campaign talking about Bitcoin and crypto, and here he is in the belly of the beast of Wall Street, TradFi money, and he's being asked questions about creating a Bitcoin strategic reserve, and he's talking about what he plans to do with Bitcoin. It's pretty big. I'm bullish, obviously, on that. I'm bullish on having a strategic Bitcoin reserve and what that could do for the Bitcoin price, the Bitcoin community, Bitcoin sentiment, getting noobs, the MAGA people into supporting the space because they support him, and then eventually changing their financial futures because of that. The other thing we can talk about too, related to Michael Saylor and MicroStrategy, last week or the week before, I'm not sure exactly the time frame, but Michael Saylor did speak to Microsoft and their shareholders, trying to implore them to put Bitcoin on their balance sheet the same way that MicroStrategy has done so with their strategic reserves. And obviously it fell on deaf ears because they did a vote, and it's completely wild to me. And this just kind of shows the type of investor that's invested in MicroStrategy and the type of investor that's invested in Microsoft. I would say you have more of a millennial investor that's invested in MicroStrategy at this point, and probably boomers that are in Microsoft that have probably 60, 70-year-olds that have held Microsoft for 30 or 40 years, and just the boomer mentality, because only 0.55, not 55%, less than 1%. A little bit more than half of 1%, 0.55% of Microsoft shareholders voted yes, and 99.45% of Microsoft shareholders voted no. This goes back to what we always say as Bitcoiners. Microsoft will get Bitcoin at the price that they deserve, because eventually this will be a thing. Either the individual shareholders or the company themselves will eventually get exposure to Bitcoin, and it will be at a higher price point because they decided not to do it now, and they'll be doing it later. And it's funny because there's been a lot of cool memes and a lot of funny things like Microsoft, and it's like, yeah, they're definitely not micro hard.
Well, Microsoft just had a vote where only 0.55% of the shareholders voted in favor of Microsoft Bitcoin investment proposal.
Welcome to the conversation. I just said that.
Sorry. I was doing some. Oh, sorry. You just talked about that?
I literally just said that.
Oh, I was completely in a different world, John. Doing some.
It's all good.
Some trading view stuff.
It's all good.
Yo, that's crazy.
Yeah, 0.55. They're boomers, bro. Like, think about it. Your demographic of Microsoft.
Boomers, guys.
Your demographic of Microsoft shareholders are probably 60 and 70-year-olds that have held Microsoft stock since the 80s and 90s. And your MicroStrategy guys are probably a contingent of people that didn't even own stock before. They're just long Bitcoin, and they're like, hey, Michael Saylor's doing this.
I don't know a lot about investing. I'm just going to pop in for 1 second. I feel like people in my generation, and again, I'm 57, so there's people older than me, obviously, that are, in the market. And I think there is a weird loyalty to those stocks that you've had for a long time. Yeah. So if you bought, like when you were 20 and you bought stock and you bought Ford and you bought big, all that stuff that you might have bought, you bought Apple, you bought Microsoft, and you're just going to ride it. And that's not the Microsoft value has gone down or anything, but I don't know if they're
emotionally attached to these coins, and it's just, they're comfortable with it.
Yeah.
And if they're underperforming, there's definitely biases.
Well, there's such an established brand. Like I mean, it's be very difficult for Microsoft to fail. They're too big to fail in the sense because it's not like a bank. It's like they have such major contracts in education and they're going to hold us forever and there's no competition. There's really not a lot of technology and software companies out there that are going to knock them down. They own so much. So like they just continue to ride the value because of inflation. I mean, I don't think their company's not growing per se, correct?
Which company are we talking about?
Microsoft. They're not. They're
getting involved in AI and all these things, and I think that's
they are, but they're not. If you look at it's a very small growth, and that's kind of what Michael Saylor talked about when he pitched the idea of putting Bitcoin on their balance sheet because they're growing at such a smaller clip than their counterparts, especially in tech, that they need to start exploring better ways to give their shareholders value the same way. And you know what? It's what's fair is I'm going to go back to Anthony Pompliano again because I've been following him for so long and I think he's so good for our space regardless of what other Bitcoiners think. He kind of talked about it makes a lot of sense right now for companies that are back against the wall, probably going to fail if they don't do something drastic, to be the biggest ones that are probably going to be the ones to dive into the putting Bitcoin on their balance sheet, more so than an established company like Microsoft or an Amazon who just have been around for so long. There's no risk of them failing or going. Like MicroStrategy was a dead company.
Oh, yeah.
And that's why he made the decision.
The stock price just broke the all-time high from 2001.
Yeah, so I mean Michael Saylor said, if I don't do something, we're dead.
Yeah.
So I can take this huge risk because if I don't take a huge risk, we're dead. So I can go all in on something because if I don't go on something, we're going to die.
Right.
So at least on this side, I know that there's a chance, where over here, I know that we die. So a company like Microsoft, I can kind of see, again, the boomer shareholder mentality. They're like, why would we want to mess up something that we've already, we're getting our returns. A lot of these guys might even be retired that have this in their portfolio. Do they want to take on this extra, to them, risk? We know it's not risk, but to them, it's this extra risk to invest in this volatile asset that may gyrate my portfolio in ways that I'm not comfortable doing, where eventually, maybe somewhere down the line, these bigger companies will eventually get exposure after you see a cavalcade of these smaller companies have these ridiculous returns where it's more than just MicroStrategy. And then
game theory begins.
That's what it is. And again, I said this in regards to your Uncle Mike, Bitcoin is an IQ test.
Yeah.
It's a financial IQ test.
Yeah.
Many people think that they know everything there is to know about finance because they've been invested in the S&P 500, they've owned real estate, they've made money in these various other markets that they don't recognize are getting decimated by the poor decisions of the U.S. government and our monetary policies, where the gains and the returns that they've gotten for 30 years are getting chipped away in ways that they don't even recognize and realize, because they don't see what's happening behind the scenes that's causing they're seeing it a little bit, but they're not really seeing what it's doing to the price of costs, goods, and services, that it's going to decimate the people that are going to be needed to continue to fund these companies in ways that they make their profits, right? Because it's not just the people that have already acquired wealth. In order to maintain your wealth, when you own businesses and companies, you need the consumers to continue to be able to consume. And if they can no longer consume because of all the restrictions that are being put on them by the monetary policies that are straining them financially, then it starts to trickle away at the abilities for these companies to continue to be profitable. And they're going to have to look at alternative ways to do that. And we know that this technology of Bitcoin and crypto at large and what's happening there is the way for these companies, but it's like they don't want to reinvent the wheel. They've been doing things successfully 30 or 40 years. They're not ready to do it until they're in a spot where MicroStrategy was in, where they're like, oh my God, if we don't do something, we're dead. And I think they're a long ways off, these bigger Mag 7 companies.
They got a lot of wealth, and they generated that wealth through the traditional financial system.
I think it's a huge stretch.
But adaptability is huge.
It's a big stretch for a Mag 7.
I just can't see how people can't see the money is always evolving philosophy. It's changing. It's always changing. So why would we just stay with dollar bills? Someone would argue we're already digital. Everyone transacts with debit and credit cards. Everything's already recorded, but you're putting trust in third parties. There's no single point of failure when you own your own keys. But there's got to be more educational. There's got to be more podcasts. There's got to be more people
that are doing what we're doing to help educate this space.
I'm looking at the time, and you teed me up for a great ending to our podcast.
All right, let's
I
hear
feel
it.
a good ending coming
All right,
on
let's hear it.
because I think that you're saying all that. And again, I've spent 2 years trying to get you as close to being a Bitcoin maxi as I possibly can. And I think I've done really well. Your portfolio is reflecting that in some sort of way. But even you, as somebody that's on a Bitcoin/crypto podcast, talking about this space and understanding the value of Bitcoin, still suffers from the fiat diseased mindset. You are profit driven. You are profit driven. The whole ideology of trading is the fiat mindset driven because you're trying to acquire more fiat. Yes, to get it to more sats, but you're still suffering from the fiat diseased mindset. Yeah, please.
I haven't added any Bitcoin to my Bitcoin position. I mean, I leverage Bitcoin on because you can leverage these coins on different chains, but that's not actually holding the coin. I haven't added to my Bitcoin stack since 2020, maybe early 2023. But the goal is at this bull run is to accumulate enough wealth in the crypto ecosystem where I can buy, 3, 4, 5 Bitcoins and still have cash and still be able to have lifestyle chips. Because I've been fully invested in crypto, 100% of my net worth since 2022, like early 2022, and I'm just starting to pay myself and reap the rewards from it. But I'm 100% like I just got a Coinbase card in the mail and it's integrated with Visa where it's just less friction. So when I sell my crypto, because when I was in Colombia, I was just paying everything in crypto. I would sell crypto, I would have to send it to my Coinbase wallet and then send it to an instant transfer to my bank account, which would be a fee for an instant transfer.
Everybody's getting them cut. Yep.
You can do like a 3 to 4 business days and it'll get in your account. But I have this debit card where you can just sell your crypto, send it to Coinbase, and then sell it on Coinbase, and then just pay, right? So there's going to be more products out there that make it less friction for the average person to come into this space because not everyone's going to be. And another thing I'm going to talk because I don't know how much time we have here about retail mindsets. People are going to be looking at the coins. To flow into the coins that you can only purchase through a decentralized exchange. But it's just cool to see this in real time, the money flow through the phases of the bull run. Bitcoin dominance hit 60%. Now it's at 55%. Looks like I'll be honest, Don, looks like it's about to fall off a cliff. But that's okay.
Bitcoin dominance?
You own some shit coins, so Bitcoin dominance.
I just want to really, really reemphasize, like, it's so hard because we live in a fiat world where you, like, again, I have a mortgage, I have I got to buy groceries like everybody else, and I have to have fiat to engage in those types of things. So it's like a double-edged sword where, like, I understand the fiat mindset disease where it's not fiat I want, it's more Bitcoin that I want, it's more sats that I want, while also recognizing I still have to create fiat in order to engage in the world. But I've completely dove in headfirst into the ideology that fiat is trash, and I don't have a fiat mindset, and I understand it's that $1 of sats is a much more valuable than $1 of fiat. So I'll value the sats. I'll always take sats over fiat anytime that I can get it. But while recognizing that I still have things I have to pay in the real world, which are denominated in fiat, and I would never pay anything in Bitcoin. And I always laugh when these municipalities are like, "Hey, we'll take your taxes in Bitcoin." It's like that. There's nothing funnier to me or insulting to say that you want me to pay number one taxes, which is fucking theft, and then give you Bitcoin to pay those taxes.
Oh,
it's nothing more insulting.
No, that's terrible.
So the last thing that we'll end, I just want to talk about real quick that happened on X the last couple of days, which I thought was really cool. We had like a Bitcoin follow train going on, and it was like all these verified Bitcoiners, Bitcoin maxis, and even MicroStrategy investors all finding each other, following each other. I was able to grow my following by a couple hundred, at least a couple hundred verified followers, and we're all following each other, trying to build our brands, trying to build our signal, and I think it's good. The goal is like people are doing because they want to get monetized. It's so hard to get monetized on X. You have to have 5 million impressions in 3 months. It's so hard to do that. You got to like really devote time. That would be awesome. I'm not going to say I wouldn't want that to happen, but that's not the goal. I like seeing all these different Bitcoiners and all these different like stuff that they post and learning things from other people that are Bitcoin focused and Bitcoin minded. I think it's really cool. X is just the best platform in my opinion. I am monetized on Facebook, and it's my least favorite place to do anything. And it's ironic that I'm monetized on there,
but some money, man.
But it's cool. It's cool that we are. We'll end at that place. Anybody that tuned in today, we appreciate. Again, please like this video, subscribe to our YouTube, follow us on our socials, on our X's. If you're watching this on Facebook, give us some love on Facebook, share it out. We're going to keep doing this. We've been doing it for 2+ years now. We're going to keep rocking. Bear market, bull market, up Bitcoin, down Bitcoin, don't matter. We're here. We're going to give you information. We're a place to go. If you're local here in Western New York, we're a local Western New York Bitcoin and crypto channel. As far as I know, the only one in the Western New York area that does this. And again, boys and girls, don't trust, verify. Until next time.
See you guys.